Join me as I dive into the world of crypto and challenge myself to turn a small investment into big returns by 2025. Crypto has rapidly become one of the most buzzworthy investment opportunities out there, and for good reason. With its decentralized nature and potential for massive returns, it's no wonder people are turning their attention to this relatively new market. But what makes 2025 so special? Is it really the year that crypto will finally take off and bring in the big bucks? Stick around to find out. I know what you're thinking. Isn't crypto just a wild west of volatility and uncertainty? Isn't it only for tech-savvy insiders who know the secret handshake? Don't you need to be some kind of genius to even understand it? I'm here to tell you that those are just misconceptions. Sure, crypto can be intimidating at first, but it's not rocket science. With a little patience and practice, anyone can learn to navigate this market like a pro. But what about the risks, you ask? Isn't crypto just a gamble, a high-stakes game of chance where only the lucky ones win? Not if you're informed and smart about your investments, it's not. Of course, there are risks involved, but that's true of any investment. The key is to do your research, diversify your portfolio, and stay up to date on the latest trends and developments. With the right mindset and strategy, the potential rewards far outweigh the risks. And let's not forget the worst-case scenario: what if I lose everything? I know it's a scary thought, but the truth is, losing money is a normal part of the investment game. Even the most experienced investors have their fair share of losses. The key is to learn from your mistakes, adjust your strategy, and keep moving forward. Advancements in blockchain technology are happening at an incredible pace. With each new innovation, the crypto market becomes more secure, more efficient, and more accessible to the average investor. And let's not forget about the upcoming regulations that will bring much-needed clarity and stability to the market. By 2025, we can expect to see a crypto landscape that's more user-friendly and less prone to wild fluctuations. Another trend that's gaining momentum is the growing adoption of crypto by mainstream institutions. As banks, hedge funds, and other big players enter the market, we can expect to see increased liquidity and more opportunities for individual investors to get in on the action. And with the rise of decentralized finance, or DeFi, the possibilities for growth and innovation are endless. But what about the environmental impact of crypto, you ask? Isn't mining just a huge energy suck that's destroying the planet? While it's true that crypto mining requires a lot of energy, the industry is rapidly shifting towards more sustainable practices. With the development of more energy-efficient mining techniques and the rise of eco-friendly coins, we can expect to see a significant reduction in crypto's carbon footprint by 2025. So, what do the experts think? Will 2025 be the year that crypto finally breaks into the mainstream and brings in the big returns? According to many industry insiders, the answer is a resounding yes. They point to the increasing adoption rates, the advancements in technology, and the growing interest from institutional investors as signs that crypto is on the verge of a major breakthrough. One of the most compelling predictions I've come across is the idea that certain cryptocurrencies will see significant returns on investment by 2025. I'm not talking about 10% or 20% growth. I'm talking about 100%, 200%, or even 500% returns. Of course, these are just predictions, and there are no guarantees in the world of crypto. But if the experts are right, the potential rewards are staggering. Another prediction that's gaining traction is the idea that 2025 will be the year of the institutional crypto investor. As more and more mainstream institutions enter the market, we can expect to see a significant increase in investment volumes and a corresponding upward pressure on prices. This could be the catalyst that finally brings crypto into the mainstream and opens up new opportunities for individual investors. So what can we expect from 2025? Will it be the year that crypto finally takes off and brings in the big returns? While no one can predict the future with certainty, all signs point to a very exciting year ahead. With advancements in technology, increasing adoption rates, and growing interest from institutional investors, the potential for growth and innovation is enormous.
The cryptocurrency market is no stranger to dramatic price swings. XRP, linked to Ripple, has surged recently, trading at $3.14, nearing its all-time high of $3.40. This marks a remarkable comeback for XRP. XRP's price surged by 50% in 15 days, part of a larger upward trend. Since November 2024, XRP's value increased fivefold, from $0.52 to $2.46 in January 2025. XRP is now the third largest cryptocurrency, with a market cap of $141 billion. This price action reignited interest in XRP. Investors are eager to understand the growth. Can XRP sustain this momentum and reach new highs? The cryptocurrency market is influenced by political developments. Recently, a US representative purchased up to $15,000 worth of XRP. This move has been seen as a sign of growing interest in XRP among policymakers. The regulatory landscape remains complex and ever-evolving. A favorable regulatory environment could pave the way for wider adoption. Ripple, the company behind XRP, has been actively pursuing a strategy of strategic acquisitions. These acquisitions, totaling over $250 million, have primarily focused on companies operating in the tokenization space. Tokenization, the process of representing real-world assets digitally on a blockchain, is widely seen as a transformative technology. Ripple aims to leverage tokenization to expand the use cases for XRP and solidify its position within the evolving digital asset ecosystem. Through these acquisitions, Ripple is building a network of partners and technologies that can facilitate the tokenization of various assets. These assets could range from traditional financial instruments to real estate and intellectual property. Ripple's focus on tokenization aligns with the growing interest in this technology from both the private and public sectors. If Ripple can successfully establish itself as a leader in this space, it could significantly enhance XRP's long-term value proposition. Section 4. Institutional interest and the potential of an XRP ETF. Institutional interest in cryptocurrencies has been steadily growing in recent years. XRP, with its established infrastructure and potential for real-world use cases, has attracted the attention of several major financial players. Rumors have circulated that institutions like JP Morgan are considering launching an XRP exchange-traded fund, or ETF. An XRP ETF would allow investors to gain exposure to XRP through traditional financial markets, potentially leading to a significant influx of capital. While the approval of an XRP ETF remains uncertain, analysts estimate a 70% chance of it happening in 2025. The U.S. Securities and Exchange Commission, or SEC, is currently reviewing several applications for XRP ETFs. The approval of an XRP ETF would be a major milestone for the cryptocurrency. It would signal increasing mainstream acceptance and could pave the way for wider adoption by institutional investors. Section 5. Navigating volatility. A look at price predictions. The cryptocurrency market is known for its volatility. XRP, despite its recent surge, is not immune to these price swings. Analysts predict XRP could reach $3.89 by 2025 and $15.65 by 2030. Some forecasts are even more bullish, predicting $10 by March 2025. These predictions are based on various factors. Investors should exercise caution and conduct thorough research. Section 6. The future of XRP. Breaking records or phasing hurdles. XRP's recent price surge and the factors driving it suggest that the cryptocurrency has the potential to reach new all-time highs. Ripple's strategic focus on tokenization, combined with growing institutional interest and the possibility of an XRP ETF, could create a favorable environment for further price appreciation. However, the cryptocurrency market remains inherently volatile and regulatory uncertainty persists. The SEC's stance on XRP and the broader cryptocurrency market will continue to play a crucial role in shaping XRP's future. Despite these challenges, XRP's underlying technology, its established use cases, and its growing ecosystem of partners position it as a contender in the rapidly evolving world of digital assets. Whether XRP can break new records and solidify its place as a leading cryptocurrency will depend on its ability to navigate the challenges and capitalize on the opportunities. The US dollar has long reigned supreme as the world's reserve currency. But cracks are beginning to show. Inflation erodes the purchasing power of the dollar. Quantitative easing raises fears of currency devaluation. The rise of cryptocurrencies like Bitcoin and Ethereum presents a compelling alternative. These digital currencies operate independently of central banks and governments. They promise a decentralized financial system free from the control of any single entity. Cryptocurrencies offer a potential hedge against economic instability and inflation. As trust in traditional financial institutions wanes, the allure of crypto grows stronger. The potential for disruption is undeniable. Decentralized finance, or DeFi, is at the heart of the cryptocurrency revolution. Traditional finance relies on intermediaries like banks to facilitate transactions. DeFi leverages blockchain technology to create a peer-to-peer financial system. This decentralized approach offers several advantages. It eliminates the need for intermediaries, reducing fees and increasing efficiency. It promotes transparency, as all transactions are recorded on a public ledger. It enhances security, as the decentralized nature of blockchain makes it highly resistant to hacking and fraud. DeFi is already being used to create a wide range of financial services, from lending and borrowing to trading and investing. These services are often more accessible and affordable than their traditional counterparts. The growth of DeFi is a testament to the transformative potential of blockchain technology. Bitcoin, created in 2009 by the pseudonymous Satoshi Nakamoto, was the first cryptocurrency to gain widespread recognition. It operates on a decentralized network, using cryptography to secure transactions and control the creation of new units. Bitcoin's limited supply, capped at 21 million coins, has contributed to its appeal as a store of value, often compared to digital gold. Despite its early association with illicit activities, Bitcoin has gained increasing legitimacy over the years. Major companies, including Tesla and Square, have invested in Bitcoin, signaling their confidence in its long-term potential. Payment processors like PayPal and Visa have also integrated Bitcoin, making it easier for consumers to use. Bitcoin's price has been notoriously volatile, experiencing dramatic swings both upwards and downwards. Despite its price fluctuations, Bitcoin has consistently trended upwards over the long term. Bitcoin's pioneering role in the cryptocurrency revolution is undeniable. Section 4. Ethereum, the foundation of innovation. Ethereum, launched in 2015, has emerged as a leading platform for decentralized applications, or dApps. Its native cryptocurrency, Ether, fuels the Ethereum network, enabling the execution of smart contracts and the creation of new tokens. Ethereum's versatility has made it a hotbed of innovation, driving the development of DeFi, NFTs, and other blockchain-based applications. Smart contracts, self-executing contracts with the terms of the agreement directly written into code, are a key feature of Ethereum. They automate complex transactions, eliminating the need for intermediaries and reducing the risk of fraud. NFTs, or non-fungible tokens, are another exciting development on the Ethereum blockchain. NFTs represent unique digital assets, such as artwork, collectibles, and virtual real estate. Ethereum's impact extends far beyond its own ecosystem. As Ethereum continues to evolve, its potential to revolutionize industries ranging from finance to art to gaming seems limitless. Section 5. Crypto's march into the mainstream. The growing acceptance of cryptocurrencies among businesses is a clear sign of their increasing legitimacy. Major corporations are integrating crypto into their operations, accepting it as payment, and even adding it to their balance sheets. Payment processors like PayPal, Square, and Stripe have been at the forefront of crypto adoption, allowing businesses to accept crypto payments. Retail giants like Amazon and Walmart are also exploring crypto payments, further normalizing their use. The financial services industry is also embracing crypto, with major banks like JP Chase and Goldman Sachs offering crypto trading and custody services to their clients. This institutional adoption is a significant development, signaling a growing acceptance of crypto among traditional financial institutions. The increasing integration of crypto into mainstream businesses is a testament to its growing acceptance. Section 6. Navigating the volatility. Despite its growing acceptance, cryptocurrency remains a highly volatile asset class. Its price is influenced by a complex interplay of factors, including market sentiment, regulatory news, and technological advancements. This volatility can create opportunities for profit, but it also carries significant risks. One of the primary drivers of crypto volatility is its relative youth. As a nascent asset class, crypto is still finding its footing. Its price is easily swayed by speculation and hype, leading to dramatic swings both upwards and downwards. Regulatory uncertainty also contributes to crypto volatility. Governments around the world are still grappling with how to regulate cryptocurrencies, and their decisions can have a significant impact on the market. Despite its volatility, the cryptocurrency market has matured considerably in recent years. Section 7. The future of finance. The future of finance is being written in code. Cryptocurrencies, blockchain technology, and decentralized finance are transforming the way we think about money, investments, and the global financial system. The rise of cryptocurrencies challenges the long-held dominance of central banks and traditional financial institutions. It empowers individuals with greater control over their finances, offering an alternative to the existing system. Whether crypto will ultimately replace the US dollar as the world's reserve currency remains to be seen, but its potential to disrupt the status quo is undeniable. The evolution of crypto is still in its early stages. New technologies are constantly emerging, pushing the boundaries of what's possible. The next few years will be critical in determining how crypto is regulated, adopted, and integrated into the global economy. By embracing innovation while mitigating risks, we can harness the power of crypto to create a more equitable, accessible, and efficient financial system. Digital gold rush. Bitcoin's quest for value. Bitcoin burst onto the scene in 2009. It promised a new era of finance. Bitcoin aimed to be a decentralized currency. This means no government or bank controls it. Bitcoin's value comes from its limited supply and growing user base. Many see Bitcoin as digital gold. Like gold, it's scarce and holds value. People buy Bitcoin as an investment. They hope its price will rise. Bitcoin's price can be volatile. It goes up and down a lot. This makes it both exciting and risky. Bitcoin relies on a system called proof of work, or POW. This system uses a lot of energy. Miners solve complex puzzles to add new Bitcoin to the network. Critics say this is bad for the environment. Despite its critics, Bitcoin remains popular. It's the biggest cryptocurrency by market value. Bitcoin continues to attract investors, but its future remains uncertain. The Ethereum ecosystem, a platform for innovation. Ethereum launched in 2015. It quickly became a rival to Bitcoin. But Ethereum is more than just a currency. It's a platform for building things. Ethereum uses blockchain technology to power smart contracts. These are agreements written in code. They execute automatically when conditions are met. Developers use Ethereum to create decentralized applications, or dApps. These dApps can do many things. Some dApps handle financial transactions. Others create digital art or games. Ethereum's energy use is lower than Bitcoin's. It uses proof of stake, or POS. In POS, users stake their Ethereum to validate transactions. This requires less energy than Bitcoin's mining. Ethereum's flexibility makes it popular. Developers are building innovative projects on it. This could make Ethereum a key player in the future of the internet. Comparing the titans, Bitcoin and Ethereum's strengths and weaknesses. Bitcoin and Ethereum are both cryptocurrencies, but they have important differences. Bitcoin is like digital gold. It's a store of value. Ethereum is like a platform. Developers use it to build applications. Bitcoin is known for its security. It's also very decentralized. But Bitcoin transactions can be slow. Fees can be high too. Ethereum is faster than Bitcoin. Its fees are usually lower too. But Ethereum is not as decentralized as Bitcoin. And its technology is more complex. Investors have different views on Bitcoin and Ethereum. Some prefer Bitcoin's stability, others prefer Ethereum's growth potential. The future of cryptocurrency. A tale of two blockchains. Bitcoin and Ethereum are at the forefront of the cryptocurrency revolution. They offer different visions of the future of finance. Bitcoin aims to be a global currency. It could replace traditional money. Ethereum